In today's video, I am going to make a comprehensive analysis of the euro against the US dollar in the 5 minutes chart. Let's start. In this video, I am going to show you how a correctly placed stop-loss order can save you trade positions. In vectors 1 to 2, we have sellers driving the price down with maximum volatility. Observe how wide the majority of bearish candles are. Let's look at the shape of vectors 1 to 2. First, it begins with an organized high volatility movement down by sellers of the market. Then at the middle, we have a consolidation zone, where minor buyers appeared, after which we have yet another organized higher volatility price movement down to vector 2. Be careful with such price movements because they can mean complete exhaustion of the current market player's energy and the beginning of the next player's new flow. After sellers run out of energy completely at vector 2, observe how violently buyers pick up control of the market. After vector 2, we have a sudden volatility shift as you can easily observe from the two consecutive bearish and bullish candles. Let's look at the characteristic displayed by both of these two candles. 1. The bearish candle has a large bearish body and only an upper tail, which represent the first failed attempt by buyers to drive the price higher. 2. The bullish candle has a larger bullish body and a tiny upper tail. 3. These two candles formed what we called a double bottom pattern. 4. Note that the closing price of the bearish candle is the opening price of the bullish candle. 5. The bullish candle closes higher than the highest price of the bearish candle. This makes the bullish candle an engulfing candle. This is because the bullish candle engulfs the range of the previous bearish candle completely. This is how the volatility shift occurred at vector 2. These buyers that won the volatility shift at vector 2 attempted to create a new higher high by they were stopped as the price nears the ignition point line of sellers marked in a blue horizontal line and labeled ignition down. This means that sellers are not completely exhausted. Observe that vectors 3, 4, and 5 create yet another double top. The interpretation I get from this double top is that sellers stopped buyers from going further at 3, and buyers overpower sellers and attempted to break vector 3, but sellers didn't allow them to do so. Sellers won the battle at vector 5 and drove the price down in an organized manner toward vector 2. As the price near the vector 2 level, it started to generate candles with long lower tails and no upper tails. Let's note the interpretation of bearish candle 6. First, note it has the highest volatility as you can see from the range it covers. Second, note that it has an unusual longest upper tail, a small bearish body, and a lower tail that pierces through the support line from vector 2, but is closed above it. The interpretation I get from these candles is that buyers were very strong at the beginning of the candle formation, but at some point, during the candle formation an even stronger pack of sellers overpowered buyers and drove the price down, attempting to break the support line of buyers, but buyers did not allow this behavior from sellers. Eventually, buyers won the battle and drove the price higher aiming to break vectors 3 and 5. But as the price nears the major sellers zone 1, it started to display a bearish hidden divergence. Bearish hidden divergence means that sellers have enough energy to maintain the downtrend or bearish trend. Secondly, the price generated a solid bearish fractal candle, with the following candle interpretation. 1. The candle has a solid medium-sized bearish body and small tails on both ends. Note that now this is a third-degree bearish fractal hybrid bar. In summary, we have the following contextual elements of both buyers and sellers of the market. 1. We have sellers and buyers shifting volatility at vector 2. Which means that the volatility control changes hands from sellers to buyers of the market. 2. Due to this volatility shift occurring at vector 2, we have a strong support line developing from here. Note that sellers failed in their first attempt to break through the support line at vector 6. 3. We have major sellers zone 1, which comes out of the ignition point line of sellers marked as ignition down on the chart, and the horizontal frequency line from vectors 3 and 5. 4. Vectors 2 through 6, seems like a sideways market. This is a situation where a trader needs to risk himself or herself and see what happens next. This is because you have all the elements to sell the market at the opening of the next candle after our third-degree bearish fractal hybrid bar. But you can as well be wrong because we have strong contextual elements supporting buyers of the market. I decided to pull the trigger for a sell order at the opening of the next candle after our third-degree bearish fractal hybrid bar. For the stop-loss order, I decided to place a few pips above the horizontal frequency line from vectors 3 and 5, for a double protection purpose. Note that you can also place your stop-loss order a few pips above the upper tail of the fractal candle and you will be right because this is still a logical place to place a stop-loss order. A lot of times going for double protection like this will be harder, because of the principle of trade location. Once you increase your stop-loss size, you need to increase your profit target size, which makes it harder for the price to reach and trigger your profit target successfully. My profit target is placed at the extreme of vector 6. If I am correct about the sellers, then my profit target will be hit successfully, generating 3% more profit in my equity curve. And if I am wrong, I will only lose 1% of my equity. A few minutes later. Observe how the price reversed past our entry price twice. Note that if I placed my stop-loss order a few pips above our third-degree bearish fractal hybrid bar, then my stop-loss order would have been triggered by buyers of market noise. But at the level where I place my stop-loss order, I was protected against market noise by the horizontal frequency line of sellers. Also, you can see two rectangles, a red larger rectangle, and a small green rectangle nested inside the red rectangle. These rectangles represent divergent price territory. A divergent price territory is an area where we have multiple divergences happening one inside another in multiple degrees. A few more minutes. My profit target was hit successfully. I hope you can see how a correctly placed stop-loss order can save you. If you like this video, please consider clicking the like button, subscribing to my YouTube channel, sharing this video with your fellow traders, and leaving your comment below. Don't forget to click the notification icon so you can get a notification every time I upload a new video. Thank you for watching and I hope to see you in future videos.